Well, you're with us here on a fresh new edition of Closing Bell. We are coming to you live from the CNBC-TV18 Motilal studios, and this is the last hour of trading this week. I'm Prashant, with me, my colleagues Mangalam and Nigel. Guys, hi, morning.
Hi, afternoon.
Good afternoon.
You're already in the weekend mood. But what a day it's been. You had no expectations of a pause. A pause happened. Thereafter, we saw this big move in the markets, and then now, after that big move, we're running into a wee bit of resistance ahead of the long weekend, perhaps.
And it's a pause, not a pivot.
It's a pause.
That's what he said. I love the way he put it, right? He's going to, in cricketing parlance, he's going to look at it ball on ball from here on, and then take action, whether or not it needs to be hit out of the park.
Pause, pivot. Let me throw in more wordplay.
Yes.
Food for thought. Pause for thought. Right? I think there is a fair bit of not confusion but debate about what this really means, because the market is off the high. Let me just quickly address what the market is doing. It's absolutely flat now. The intraday high stood at about 17,639. And it's spent, if you look at the Nifty through the course of the day, majority of the time has been spent around that 17,615 levels. What is that? That is nothing but the 38% retracement of the entire fall from the all-time high of 18,887 to the recent lows a few weeks ago. So just briefly, from I think between 12:50 and 1:30, that those 40 minutes, the market saw a throw over above this level, made that intraday high, and we are back under this level once again. So I think the level very naturally to take out and to close above next is this one, 17,615. Now the RBI surprised with what was a hold but a hawkish hold. Commentary and all of that, as we've been discussing, was the job is not yet done. This is not a pivot. This is a pause. It's just for this meeting, etc., etc., etc. So many are asking, what does this really mean then? If it is a sort of pause, how long could the pause last for? We heard from people like Ajay Srivastav earlier who said that, well, it's not that they're going to pause and then the next meeting they're going to sort of turn around and hike again. That's one point of view. The other says, well, we should take the governor on this, in terms of what he said, and it is just a pause for this particular meeting. And I think the market is kind of trying to calibrate all of this. And I think it'll continue to do that. Tomorrow, of course, we got a market holiday, but global markets continue to trade. And I think the big one is going to be the US jobs data tomorrow evening, which I think will either be in line with the weak set of data the US has been throwing our way, which is good. If the US jobs number, which is the most important data point that the Fed watches, comes in very hot, I think that opens up an entirely new debate for the market and for policymakers, both in the US, here in India as well. So I think interesting lineup over the next couple of days, even though today is the last day for us in terms of trading this week. Guys.
Well, we'll have a weekly expiry as well, right?
Yeah.
That will play out. So that's going to be quite interesting. We have a bit of a range on the upside. The intraday high was around 17,640 odd. So that's going to be a bit of a resistance zone. And you look at the options. Let's pull up both the two strikes up for you on the screen. 17,600 call as well as the 17,550 put. Well, both of them are seeing some bit of writing out there. Maybe at around the 17,600 odd mark, you're seeing some bit of buying as well. But the intraday high, 17,640, positioning as such that holds out. Let's see whether or not that does. And on the downside, 17,525 odd, that should be the level you're looking at on the downside. But let's see, Mangalam, how things go from here.
Yes, let's see how things go from here, from the frontline end of things, Nigel. But I'm looking at the mid-cap end of things, and out there, portfolios are looking very happy today. Not just today, over the last few trading sessions itself. The mid-cap index is up almost 1.5%, whereas the Nifty is up just 1%. The small cap index has even outperformed the mid cap index out there, as well as the frontline indices. The Nifty mid cap index was an underperformer in yesterday's trading session, and that, like we pointed out yesterday as well, would perhaps be on account of the weekly options expiry of that index, so maybe some management out there. Today, even as the frontline indices are mildly off highs, we have the mid cap index at the high point of trade, two stocks advancing for one declining, and beneath the large mid-cap names that everyone talks about, look at the way a lot of these stocks are moving. I don't remember the last time I saw something like a Barbecue Nation move 14% higher, Tasty Bite Eatables up 8%. And these are stocks with decent volumes. Borosil up around 7%, Sheila Foam, and then you talk about all the big rate sensitives which are doing well, be it the NBFCs, be it the real estate pack. All of them doing extremely well. So portfolios would be happier, looking forward more to the long weekend than the frontline indices.
Just making one point, Mangalam, April historically has been a good month for the broader markets. And whether it's on the downside or the upside, in the month of April for the last 10 years or so, the small cap, mid cap index has outperformed what the Nifty does. And at least in the first week, it's appearing to be no different because the small cap index is up close on 2.2%. The Nifty is up close on 1.4%. We're talking about month to date. So let's hope that trend continues because portfolios, some of them have really got clobbered. Hopefully a bit of a bounce back.
Hopefully that continues. And the other thing I'll also be watching out for next week is, when the earnings season starts, etc., Midcap IT. That's been one of the packs that have been doing well over the last few trading sessions too. So whether that continues to do well or not. But all of that in just a bit. First, let's tell you what's lined up on the show today. Real estate stocks, they surge higher post RBI's surprise move to keep the repo rate unchanged at 6.5%, bringing in some relief for home buyers. We'll analyze the impact of this development on real estate players. Indian Energy Exchange is the biggest F&O gainer of the day, and this after the company announced its March total volumes grew by 12% sequentially. Details coming up later on the show on that one as well. Dabur's weak fourth quarter update hits the stock down almost 4%. The company said they expect the operating margins to be lower by almost 200 to 250 basis points. And as usual, we'll also get you the alpha manager of the day. Jitendra Gohil of Credit Suisse Wealth Management joins in for a chat on the markets, his top portfolio of bets. All this and more in the next 60 minutes.
Okay, well,